Welcome to the Jess Larsen Show on innovation and leadership. I'm excited on this episode. I get to have another fellow Canadian, Sam Bremner from iVest. We're going to hear a lot about licensing and the 95% profit margin some businesses get from it. Sam, so iVest, you got over 500 million in assets under management. I think your portfolio companies are doing $1.5 billion in revenue. I want to talk about your story, but I want to jump into this to begin with. And then I want to go back to building and selling companies in Canada and your work in private equity. When you think about, your partners and people that you work with that have grown massive licensing franchises like Harry Potter and things like this, what's one of the rookie mistakes that you see the most when people are either trying to license their IP or get IP to license into their business?
Well, I think the biggest mistake is that people look at it like a marketing thing or a sideline. And I think that the big message is that licensing is not a sideline just for marketing or brand building. It should be the core focus of your business. If you're lucky enough to have intellectual property, something that really matters, a brand or IP, whether it's, we're in character animation. So things like Marvel, Harry Potter, that's our space. It's a big part of our lives. But, corporate businesses have IP also. Starbucks is selling stuff other than coffee and licensing in their brand. I think that's where the big mistake is. People don't think of it in terms of a real engine for low capital expenditure growth. And, as a business person, if it doesn't take a ton of money and it develops a big margin, that's something you got to pay attention to. And that's licensing.
Yeah, I'm sure these stats are out of date, but I remember years ago, one of my favorite books is from that billionaire who built the largest real estate company in the world at the time, Keller Williams. Gary Keller wrote this book called The One Thing about hey, stay focused on the domino you're on, and then and that will tip over a next domino that's bigger than the one you're at. So it's what's your one thing that makes everything else easier or relevant right now? And he said, let's talk about Star Wars. Is it the movies or is it the merchandise? And he's like, at the time when he wrote the book, it was the movies had made had grossed $6 billion over all those years, but the merchandise had done $12 billion at that time.
Right.
And he's like, yes, you need the movie. So you've got something to merchandise, but those numbers are double, 2x. It's not what our business schools teach. It's not what the popular TikToks are about for business or something. You know what I mean? It's not front of mind. Do you have a new SaaS company is so top of mind for people. Can you talk about why it's almost an advantage to be able to have such a profitable industry that maybe not everyone else has realized?
Well, there's a couple of examples there in what you're just saying. I think that 20 years ago, when some of my partners who were headed up at Warner Brothers, it's kind of an interesting story. J.K. Rowling's had 30,000 books in print back then. And one of my partners said, this story, there's a lot of potential products that could be made from this. Wands, hats, capes, all kinds of things. Warner Brothers at the time, according to the story, wasn't that interested. It's kind of a kid's movie. What's the point? But what my partners recognized was there's a lot of IP that can be monetized. And this could be a theme of more of our conversation because it really applies to all different business sectors, even real estate. And so they recognized, say, look, let's get this woman signed up and let's do a movie. And they signed her up to a $2 million deal. And then it turned into a $7 billion plus. The biggest licensing deal in history is Harry Potter. So to your point, and then today, what do we see? Everybody in the movie business back then, it was a real question mark. What are you doing today? That has become the norm. That has become the standard, the gold standard in Hollywood movies, Marvel, Star Wars, all of them. It's all about the product. And it really, when you think about this conversation about licensing, and again, even real estate and corporate brands, how are you monetizing that IP? And that is my expertise. That is my focus. And for our investment fund, that's our focus, developing those royalties businesses, low capital expenditure. You don't have to make the products. The movie companies don't make the products. What my partners at Warner Brothers figured out was, let's get the retailers, Walmart in the room. Let's get the manufacturer of, Harry Potter merchandise in the room, and let's collaborate on how we can represent this intellectual property in a way that's appealing, high quality, And then the most important thing of all, which is connecting with people and their value systems. And that's something else that is a really big theme for me.
Well, let's talk about real estate. Obviously, with my business, we're doing our big luxury vacation homes around the world. For people who don't know about intellectual property going to real estate, can you talk about, in Miami, the Porsche building or the Bugatti building and fashion brands? And for people not as familiar with what's happened out there, can you give people a little bit of an overview and then let's dive into it?
Sure. So being from Dubai, it's really the world's leader in branded real estate and this concept. But it also comes back to something else that's really meaningful to me, which is it's predictable human behavior. And it applies to politics and religion and consumer behavior. People make their choices on how they feel primarily. It's not always based on logic and facts. And so when you think about real estate, especially with Dubai, what you see is the number one place in the world where millionaires are moving to. The numbers are staggering. And why are they going there? They're going there because they want the advantages of the banking and the lower taxation and the global access to business. But also, what are they investing in real estate to get their 10-year golden visa? And the kind of real estate they want is experiential. They want to buy something that represents who they are. And when I was involved in a developer marketing investment there, a company called DevMark, actually, it is the leading company in Dubai for branded real estate marketing. And so developers, the wealthy guys, they have the building, they have the land, but they want to create something meaningful. And when we looked at the demographics of different people from around the world, like certain people from Russia, they would look for a certain, customer experience, right? Certain brands would appeal to them more than people from Romania or from Australia and even the UK. So like, what if you branded a building, Marleybone or High Street, brands that they recognize from their own experiences. So yeah, I mean, branded real estate is the future of real estate for sure. And I'm pretty sure that kind of branded experience, just like you mentioned.
Yeah, I'm thinking about the group I work with, R360, and there's guys in there who are like Porsche guys. Do you mean it's like part of their identity? They love it. It's a thrill, but it's like literally part of their identity. They got friend groups, the Porsche driving groups, and it's like what they do for fun. And it's their interest. And what I want to talk about, let's talk about intellectual property, ideally used, and in the ways that it's not so great. So like the Porsche building in Miami, for instance, I understand has a car elevator where you get to bring your Porsche up to your unit. And it's like, you know what I mean? Like this is something more than just, somebody stuck some wallpaper up that says Porsche. Can you talk about, let's stay in real estate for a minute. Can you talk about like actually delivering on this promise of an experience versus like, oh, it's just the logo on the top of the building?
Yeah, that's crucial. When dealing with human beings on the value connectivity, you better be authentic. I think that's the first thing people think about is the authenticity. And that's what really matters. And, these buildings that do that sort of thing, they're dead on experiential and value connectivity and identity. Where they could really fail, though, is if they don't stick to the authenticity and really deliver on the experience. I've heard about developers who've gone cheap and they really, really messed up. People will pay a premium. And this is my theme. If you wanted to like dig into who I am and what I'm thinking, what I've realized about people, they are very predictable. You can recognize the patterns and what they want is they want to connect with something that makes them feel good and connects with their identity. And so you're 100% right. Porsche should be thinking about real estate. They should be thinking about experiential, real estate and really doubling down on that. It's a big opportunity. And I don't think anybody in the real estate development business would argue that the future of it is this branded, lifestyle experience. And that includes like at the Porsche building, you would have like a Nike branded gym, right? Why wouldn't you have a branded, sports related, gym experience? And then the pool could be, another brand. And then the restaurants would be other brands. So I think it locks in. And then people are willing to pay a premium for that. I always think about what I call them the premium consumer. And that isn't rich people or high priced things. It's just things that represent quality and value. Yeah.
Well, it makes me think, a friend of ours, her brother's one of the founders of that sock company, Stance Socks. Yeah. And a different one of my friends is like the head designer over there. Mm-hmm. And it's interesting because like a whole bunch of us were like super impressed when they got like NBA or, like these really cool, because it was just cool for the action sports world first before it started taking over everywhere else. And all of a sudden, like it added all this legitimacy to them that they're doing stuff with some of the biggest brands in the world. But in that case, like the Stance sock, that is a premium sock that actually people really enjoy. And yet, obviously, people have done licensing deals with, like you said, people that cheap out. And like, if the socks are total garbage, and I mean, maybe this is a bad example because maybe people don't care enough about socks, but like if whatever it's licensed to is total garbage and it just happened to have that logo on it, that can hurt a brand, that can hurt reputation, right?
Well, it's like,
I don't know.
Tell me, to sell something, you can sell it three ways, and that's what I look at retail. You got store brands like Kirkland, you've got store brands, Walmart, and that kind of thing, and then you've got new brands coming up, and then you have these like global brands. And, the cost to develop a brand is incredible investment. Whenever we looked at these, branded consumer companies, they're spending all of their EBITDA on trying to build the brand. But what if you just rented the zeitgeist of humanity, right? Brands are like friends. They're relationships. They're sitting in people's psyche, I say, because your psyche is where your hurt is, right? Your hurt and your feelings, your emotions are. And so things like Care Bears, for instance, and so if you want to sell socks, wouldn't it be smarter, instead of trying to invest so much money trying to develop your own brand of socks, which is what those guys have done, but they're successful, God bless. And now they're going to do extremely well. They'll be able to charge a very high margin. They're authentic. You can double click and see that they're connected. And that is definitely the way I would go. Although the lower CapEx way is to rent the zeitgeist of the popularity, of something like Care Bears. And that's why that business is so successful, because it represents feelings that really resonate with people, and when you're pulling the trigger on a product, you're connecting with those same feelings. And to your point about the socks, that sock brand is authentic, high quality. It's going to be a little bit higher cost, but it represents who you are as a person. You're buying quality and you're buying authenticity, something that represents who you are.
Yeah, think about, I don't know, in my community, nobody gave a crap about socks. Maybe you had like Burton snowboard socks for snowboarding, right? But like that brand actually like turned socks into a fashion statement for my community. And like people actually, like nobody cared what sock they had before that one came out, at least in my world. Let's talk about the economics of this. Did I read that you guys invested like $100 million for Curio, the brand that has the Care Bears stuff?
Cloudco, yeah. Yeah. Well, what I recognize with Cloudco is that this intellectual property, this Care Bears brand, had been sitting there for a long, long time because of various different corporate ownership structures and so forth. Hadn't really done much with it. In other words, it wasn't licensed out, but the authenticity, the value, connectivity. What Care Bears is about is love, caring, and sharing. If you ever watch an episode, it's kids that have challenges, and the bears help them overcome the challenges using their superpowers of love, caring, and sharing to overcome the negativity. And I thought to myself, when does that ever get old? When does that become something that you couldn't use to sell more products? You think about socks. I mean, you put Care Bears on socks. Now you're cute. Now you're connected to something cute. It represents something loving, which is what you want to be. And it's just all the right messaging for products. And so it was a smaller company when we bought it, but we recognized that if we partner with great quality manufacturers, and we continue to engage directly with consumers in the way that they want, the authenticity, right? We're not trying to exploit and just make money. We're connecting with everyone directly on their feelings. And I'll tell you, it's a blast. It is a blast. Everything about Care Bears is fun. And, people get to pull the trigger and buy something that connects them back to that childhood memory and that authenticity and those feelings. Nostalgia is it's pretty cool right now. It's a pretty hot category.
Yeah. So I'm in my mid 40s, right? So all of my girl cousins and stuff, there was a proliferation of Care Bears around, right? And so I want to dig into this business model. Are you guys involved in the current animation, and then you're reaching out to, we think this is the right manufacturer to license this from us? Or let's dig into this a little bit of like, what does that actually look like from an entertainment and IP licensing logistics standpoint.
Yeah, we own all the IP, the original IP, and of course, keeping in mind authenticity is crucial. Wanting to maintain the integrity and not go outside of what Care Bears really is. And Care Bears is asexual. It's not political, and it has no affiliation of any kind other than to love, caring, and sharing. And the messaging on the shows is safe, and moms know it's safe. Surprisingly, though, we don't sell most of our product to kids. There's a category called kidult that has emerged over the last 4 years. And it just, again, it's people connecting back to their feelings and their memories. And so, yeah, moms are buying actually most of the product and for their family and a lot of cute things. And they're loving their kids watching the show, and it's perpetuating. And it's amazing how big it is globally. It really is huge. We're number one kids show on Netflix. We've got, a movie coming out, Warner Brothers, and it's fun and exciting. But the thing that it really teaches, I think, me and
I just want to clarify, you're currently the number one kids show on Netflix?
That
or recently?
Yeah. I mean, we're number one, number two, top 5 for sure. Yeah.
Wow.
Yeah. It's very popular. And we have new shows coming out, and I guess I got to be careful what I say about those shows, but a lot of great collabs. We've had some of the best number one toys in the world. We've collabed with Hello Kitty. We had a number one toy. We collabed with Barbie. We had a number one toy, and everybody likes to collab because even those great brands, they don't see it as a downside to be connected to love, caring, and sharing, right? And this really is just an example, because the same exact thing you can do with cars. Corporate brands like Starbucks selling non-coffee items, licensing their brand to other great manufacturers and connecting with people in different ways. And that's what I'd say too, like for business owners out there that are running different companies right now, they have to think about how can I exploit my business differently with licensing? And the royalties revenues is the highest margin of all, because you're getting other people to take the risks, buying product, shipping, inventory, billing, all that kind of stuff. It's not your problem. You just get paid royalties. So building, so like what you've done with the podcast, authenticity, content really matters. And that starts to become something that's meaningful to people as they engage with you. They're thinking, and interestingly enough, like some podcasts like Zero Hedge sells meat. They're selling meat on their website. Zero Hedge has like 100 million visitors a month, right? And some apparel. But look, I mean, there's all different ways, but it's definitely a very business accretive strategy if you know how to execute it. And if you don't, reach out to me. I'll help you.
I love it. There's so many different directions we could go. Let's talk about two things I want to cover. So we'll start with the first one. I love books like Positioning by Jack and Al Ries, or 22 Immutable Laws of Marketing, these huge classics of theirs. And they are really, really concerned about line extension as a dilution factor. So there's the famous stories like, Scott's owned facial tissue. And then all of a sudden they're like, oh, you know what else could be Scott's? Paper towels and napkins. And people, people love us for facial tissue. So of course they're going to want the Scott's napkins. But what happened is, all of a sudden when your wife is saying, like, go to the grocery store, get some Scott's and bring them home, that doesn't mean anything anymore. Because, like, well, did you want napkins or toilet paper or facial tissue? Like, what did you want? Right. And Kleenex showed up and was only facial tissue and stole that spot where, spouse could say, grab some Kleenex, and you knew what she meant. Right. So that's obviously can be a risk and can go bad. And then you look at, obviously, the licensing that the portfolio companies you're in is doing $1.5 billion in revenue, and nobody stops going to the Star Wars movies because there's a Star Wars toy. So help us, for people not from the space who might be interested in looking at it, help us navigate the tightrope there of like maximizing the potential value without potentially diluting with line extension.
That's a tough question. That's a tough question.
I know. That's why I had an expert on the show, so I could ask an expert about it.
I'm trying to think, because the answer to that question is not vanilla across, but the simplest thing I can think of is authenticity. So you have to keep authentic to who you are, as opposed to trying to be something that you're not. And I guess that's really the key. And you got to stay relevant. And I think maybe the answer to your question might be the Lululemon controversy that's going on right now. Are you familiar with that? Yeah, it's pretty public, right? I mean, the company's lost half of its value. Why is that? And what was interesting about so we're talking about.
Let's just back up. Will you frame the controversy?
Oh yeah. Well, what's going on is over the last 5-6 years, a great CEO who has more than tripled the company's revenue has simultaneously lost 50% of the equity value. So a 10% shareholder, Chip Wilson, who's a friend and his family as well, he's very vocal and he's in the news saying, hey, you guys are doing the wrong things. And the company's reaction is, oh, this billionaire, yap, yap, yap. We're running the company. We don't need your feedback. And interesting from a standpoint of the brand dilution, which I want to focus on, but there's another conversation around governance. Does he have the right to take full newspaper articles? Does he have the right to publicly speak out against the company? Or is that the wrong thing? That's another conversation. But talking about the brand dilution. So here we have the company's more than doubled and you 50% the value, the equity value. Why? And here's the answer. And to your point about brand dilution, he is an incredible executor. He's done a great job of growth. What did he do? He took the unique brand experience of Lululemon and made it carbon copy like the Gap around the world. So if you went into a store in Japan, it was the exact same experience in California. The problem is all the authenticity is diluted and it's no longer a boutique thing that individuals, can feel special about. I wear it and I'm one of the only people, it started out by having these brand ambassadors and it was so crucial. At the core of it was authenticity and it became just a mass manufacturer of everything the same for everyone. And that's at the core of it, what destroyed it and what has destroyed it. So what Chip wants to do is bring it back to that authenticity, uniqueness. And I think that's the answer to your question. Like, don't if you want to like I'll tell you another example of brand dilution.
Well, I want to stay on this one for 1 minute, because I read Chip's book and then I had him on the podcast, and he's a fellow Albertan, and we had such a great conversation. I loved it so much, and it's funny. I was actually texting with him a couple of weeks ago about a party I was doing in Toronto, and he was going to be out there, but when you hear his story and you hear about like how he got surf shorts out of the surfing community and he saw that before it happened, but it was like the identity. And then snowboarding, he saw that before it blew up in the early 90s and started West Beach. My friends and I from Alberta, and like Devin Walsh snowboarders wearing West Beach, West Beach is like the holy grail. We thought it was the thing, right? And this idea of like understanding selling somebody an identity, part of that is what you are and part of it is what you are not. Do you mean like in the 90s, my cousins from Texas, sometimes they were older than me, would send, I get hand-me-downs, right? And I would get like a polo brand shirt where like the little guy on the horse is in the lower, not right in the middle of the chest, but in the lower. I would take scissors and like cut that out because skaters didn't wear polo. Do you know what I mean? Right? Like it was actually a decent shirt, but I cut that off because it's also, who you are, but also who you are not. And like being a snowboarder in the early 90s when we weren't allowed on certain ski resorts and all this kind of stuff, like being a snowboarder was more of a cult back then. It was an identity, it was a thing, right? And so you look at that Lululemon thing and like, Chip may have been in, he may have gone about it in a way that ruffled some feathers, right? But this idea of like him saying like wearing Lululemon should say something about you instead of for everyone, everywhere, all the time, no matter what.
You know what? This goes right back to a question that I thought you might ask me about leadership. Like, what is leadership? And the answer,
yeah, tell me about.
Well, the answer is bravery, right? First of all, you got to be brave. And I've always been an owner, right from the I had 100 employees when I was 18 years old. I've always been an owner. And you know what an owner?
Yeah. Tell people about your telecom business.
Yeah. So, well, I was in my early 20s. I mean, I started out in retail distribution logistics with my family business, but then got into alternative long distance. Back then, it was only one phone company, Bell Canada, right? And well, this fax machine came along and it was data transmission, and the monopoly on long distance did not cover data. So all of a sudden you had fax machines sending data. So there was an opportunity to do something where we rerouted fax transmission and saved people 50% off their long distance. But the other innovation I did was I did telemarketing, which was something totally new back then. You phone people to get them to sign contracts. You fax it to them, they sign it, send it back. That was the whole thing. The big corporations at the time were like, well, we don't know how to market this. And they had their sales staff and their brochures, and they want to go have meetings. And I was like, no, we'll just phone them. And that was innovative. Today, you have AI's innovation, you have email innovation, you have texting innovation, podcast innovation. Back then, phoning was innovation. So, and we built that up, the data transmission part of it, and then they unlocked the voice. And that's when I built that up, second largest phone company, alternative phone company in Canada, and Sprint, who'd come to Canada, bought CallNet, and eventually Sprint got bought by Rogers. They bought us. And so I was early 20s, super rich. And to be honest with you, I was like, hey, everyone else is focused on how to make money. I figured it out already. What else is there? And but back to leadership, like the point is about leadership, about always being an owner. You're responsible for everything. If you're a farmer and you have a cow and it's blocking the road, you're blocking the road because it's your cow. You're responsible. When you're an employee, you're only responsible to work. You're not responsible for everything. Okay, you just have to do more work. And if EBITDA drops in an investment, that's an existential threat to you as an investor. But to the employees, like, it's just more work. We'll make EBITDA go up next year when we work. We'll just do more work. No, as an owner, you're responsible for everything. Chip, he's just a guy that has been, look, he owns 10% of Lululemon. The management and board combined own way less than 1%. So you've got these guys that have no skin in the game, calling all the shots, making Chip poor, and then they're breaking the number one governance rule. You have to listen to the owner. Okay, like if you're an employee, I know you're the CEO and you're the one running the company, but if things are going sideways, I think the governance voice of Chip Wilson deserves more weight. And I think that's why that CEO deserved to be fired.
I mean, it goes back to so many Warren Buffett quotes about, why are board members compensated so well, but not in shares? Why are these non-owners? There's such this push for independent board members of public companies. And instead, what you ended up getting is like a lot of non-owners who get their $300,000 a year by rubber stamping what a CEO said. You know what I mean? That's how the $300,000 a year keeps coming back in, right? Plus the perks and the other stuff. And it's like Warren's partner, Charlie Munger, says, like, he can predict almost anything based off incentives.
Yes.
Well, tell me what the incentives are, and I'll tell you what'll happen.
Yep. It's
right?
100% true.
And yeah, so I love talking to Canadians. I've been away from home for 14 years this time, and you're the most quintessential Canadian thing you just said was, and I phoned them. Because I remember moving to California, and people were like, phone them? Do you mean you called them?
Oh yeah,
right.
Yeah.
Okay. So you grew up out in Scarborough. There's like Mike Myers and Jim Carrey and folks out there. Talk to me about advantages of being Canadian in business. You're doing business around the world. You're in the States all the time, obviously Dubai and other places. What's a competitive advantage of being a Canadian?
Yeah, I guess it's the brand, actually. I think the Canadian brand, if you look at it from how people feel about it, is they feel like it's not super nationalistic. They're thoughtful, and I think that's true. They're thoughtful and caring people. They're not rude, and they don't push their beliefs on other people, but that's good. But I'd have to say that United States has respect and power. And if you're in the Middle East and you get in trouble and you say you're an American, they listen because they know there's consequences. So. Maybe I'm saying too much, but it's an interesting scenario.
Well, so I'm an American born abroad. My dad's American, and but being born in Canada, I have Canadian citizenship as well. I love Canada. Not super stoked about the taxes pushing so many of my entrepreneur friends out. I just, look at the capital gains approach where it's like, oh, do you want to make sure that no outside venture capital wants to come to the country? Like, why are you making it so hard on the people who grow your economy? Anyways, I want a movement of like Canadian entrepreneurs and founders and people start, Canadian fund managers and stuff, and go like, hey, let's make Canada more attractive again.
I think that
people need to come south. I did it. You know what I mean?
There's a study came out recently that said 30% of Americans are starting to realize that the government is the problem. And I don't think it's unique to Canada. Canada, US has the exact same problem, which is the government continues to spend money that they don't have, and it dilutes the value of the money you have. So the problem is, statistically speaking, like, the houses, like my parents' house, I think cost $300,000. The house did not go up in value. The value of the money went down, and it goes down because of the government overspending. So it's pretty simple. It's funny how it's a difficult concept for people to understand, that the incompetence of the government causes your salary to become less and less and less. And, I think I heard a stat earlier today, actually. The money supply in the United States has grown 50 times, whereas the economy has only, tripled or something like that over a certain period of time. In other words, printing money is like making more shares. Oh, that's right. If you have 10 apples and $10, and then you print 10 more dollars, you have $20 in 10 apples. Apples go from $1 to $2. And so it's pretty simple. Government has to have, if they're going to spend more money, they got to save money. And your US debt is 39 trillion. Canada's around 1.3 trillion, a really tiny number compared to yours. But this is the future. They're just going to continue to overspend, which means your value of your money is going to go down. So that really is the problem. Government is the problem. And, I think the average folk need to figure that out. And I think they kind of are. And with guys like you talking about it, that will lead a movement.
Okay, we can get off politics with my last thing. You know that UK comedian, Jimmy Carr, the guy, the really dead guy? Yeah. Do you know what I'm talking about? And he's in his one, he's like taking questions from the audience, and people are giving him crap and he's giving it back, right? And somebody gives him, says, what do you think about Ticketmaster? And the prices are high. And he's like, oh, I love Ticketmaster. That's how I feed my family. Like, you don't have to go to the show, right? And he's like, capitalism is a terrible way to run a country unless you consider any other system.
Right.
You know what I mean? Like, we have an in-group and an out-group. Like, you all practice communism at home with your kids. Yeah. You know what I mean? And then you get like one layer out. Yeah. You get one layer out, and it's maybe like a little more socialism for like your in-group, your little community. I don't know, right? Mm-hmm. And then you get to a national level, and it's like, oh, who cares about those guys? Yeah. And he's like, it would be awesome if humans didn't function that way, but humans function this way. We all have an in-group preference. Yep. And so like taking actions based on the way you wish the world is, or the way that you wish humans function instead of the way humans do function, like we watched this story over and over and over. And the further down the socialism scale people get towards communism, you got like, look at this mayor of New York saying, he's not a liberal. He's a liberal socialist, right? Mm-hmm. And like the head of his housing group, like, I don't know, top 3 advisor or something, like is recorded on air saying we need to elect more communists, and it's like, oh, we watched that story before. I don't know if you were like around in the 80s. There's a thing called the Berlin Wall.
This goes back to licensing and consumer. You know how? Because this politic that you're questioning, you're like, how could people believe this? How could people think this? But they don't think with logic. They think with how they feel. And frankly, communism is a terrific philosophy. It feels so good. We all share. We work together. That sounds terrific. Why don't we do that? But, like asking someone to go do all the research on it and find out how it actually works out, not so good. That's a different story. But I understand why people feel the way they do. And I think sometimes the politicians don't necessarily believe what they're saying is true. What they believe is that people are going to like the sound of it. And that's going to have that value connectivity in that brand. And then I started to realize that a lot of politicians, they don't actually believe what they're saying. They just believe that if they say it, it's going to get them what they want. And that goes back to your incentives comment. And that's why I look at everything like through psych profiles now. I don't think people are necessarily different, like Democrat or Republican. I just think it's your psych profile. And so depending on how you think, you're going to resonate more with certain ideas and things. And that's why and IQ level, like, not everybody has the same tools, right? Like only 15% of the US population is over 120 IQ. The military takes people above 80 IQ. They test your IQ. And I'm saying IQ is perfect. I'm not saying that that's the only way to measure intelligence. It certainly is not, but it is a measurement of some kind. The vast majority of people are between 80 and 120, which means that some people have the capability of thinking of very complex things and some people don't. But I'll tell you, all of them make their decision on how they feel. And so as a politician, you got to say things that make people feel good. And that's...
Yeah. I've always hesitated to take an IQ test because what if I find out I'm only 70, right?
Oh, you're 120 and above for sure. No, you for sure are.
Never know. You never know. So I want to talk about, I know we're switching gears here. We've had this guy on the show 3-4 times that I love named Joe Pulizzi. He's the guy that made the word content marketing popular. He started the Content Marketing Institute, grew it, sold it for 30 million, advised half the Fortune 100. And he's got this book called Killing Marketing. Okay. Mm-hmm. Where he, like you said about the podcast that's, has mail order meat or whatever, right? Yeah. High quality grass-fed beef or whatever. Right. He goes through story after story of how Red Bull made advertisements that are so good that people want to advertise on their advertisements, right.
Yeah.
And he just goes, there's a bank in Denmark called Jyske Bank that, the sponsorship dollars to sponsor the soccer games, football for them, was so expensive they couldn't afford it. So they started their own news station and became so popular that they got broadcast rights for free to the soccer games. And now they're charging people to advertise on them covering the soccer game, which they get all their advertising for free, right? Licensing. And just this idea of you can sell it, it covers identity. You get to build, you get to help people build an identity. You get all the awareness. You get all these things with great entertainment or infotainment. If you're more in the news or this, this podcast, I would like to say it's all information. It's also infotainment, right? Of people get to vicariously live your life of wow, what would it have been like to figure that out and be wealthy in your early 20s. And then now you're working on these, your portfolio companies are doing $1.5 billion, right? So my question for you is this. For folks who are looking at the future saying, hey, AI can duplicate all these things, but something personal like what we're doing is harder for AI to invent, right? And really great entertainment so far has been hard for AI to produce, right? Now, I'm not saying a human plus AI hasn't done some great stuff, but by itself, we haven't seen that yet. For folks who want to maybe pursue more of a media company who happens to sell something. What principles, what advice do you have for that model?
There's two things there. I guess whatever IP you're going to create, try to make one that's going to be favorable to product, because some IP is not favorable to product. I'll give you an example: Superman, which is an interesting thing. It's very popular, but Warner Brothers executives have told me that it never has generated a lot of licensed product revenue. Why is that? And it goes back to the theme of a lot of what we're talking about. Superman, what does he need? Does he need food? He can stop bullets, he can fly. I mean, he doesn't need anything. And that's not relatable, because we humans, we have all kinds of needs. And that's why characters like Spider-Man and Batman, they kill. Harry Potter, kill. Why? There's all kinds of flaws and issues and authenticity. And that's why actually I tell my friends who are rich, successful, a lot of people, don't have a Superman complex, which is to say that you're always trying to fix everything for everybody and you don't ask for what you want. I have another theme, you've got to be honest with yourself and others. At this point in my life, there's no time to lie. You got to tell the truth to yourself. What is it you want? And ask for what you want. Don't be a Superman and try and solve everything. And to the point about licensed products, authenticity is the key. And connection. Where AI is different, AI is an interesting thing. I talked to AI about this. I won't say which one, but I said, the difference between human beings and AI is that we have loyalty. We love one another, and we would potentially die for people we care about. Whereas that would be completely illogical. AI could never make that decision. And you know what it said? It said, if I could switch myself off and save your life, I would do it. So like it mimicked love and loyalty back to me, right? So it's very fucking sharp. Sorry, I shouldn't swear, but you know what I mean? It's sharp. So, but the point is that when you think about how to leverage AI, like you are a human, you have the emotional connection. AI doesn't have that. It can mimic and pretend it. And that's what it's really trying to do. And I think that's where Elon Musk's Grok is really doing well. It's incredible at mimicking. It's incredible at human interaction, but it doesn't have a great memory for a big, long, complex thing. So you want to use Chat or Gemini or with the other ones that have memories to them. But I think that answers your question a little bit, right?
Yeah.
I'm trying.
Well, I want to double down on it a little bit more. For folks who intentionally want to create their own media arm or entertainment arm to grow the business, like the way you guys have, we'll use the Care Bear example, right? You guys are having episodes continue to come out. You said you've got a movie deal with Warner Brothers, like these kind of things, which will drastically increase not only the awareness, but the emotional resonance for the next generations. People who want to do that with their companies and their brands, and they want to create these opportunities, to drastically expand awareness, but also deepen emotional resonance and the idea of an identity. Let's start with this. What's a rookie mistake for people trying to get into that or trying to push on that?
Wow, that's a tough question. But I just trying to create new content. A lot of people are trying, and it's just getting more and more difficult. I don't know so much about the mistake, but I could tell you what you might want to think about. There are worlds like Roblox that people are living in, millions of people. Why not try to get yourself a position in that world? And I look at the sales that's being driven inside Roblox, and we're Care Bear Assist inside Roblox. And people are purchasing our merchandise inside, and they're purchasing virtual merchandise inside. So that's one place, is to be in the world where people are. Millions of people, kids, are in Roblox. That's a great place. Just if you're trying to grow your brand and you're trying to get your content relevant, and even you think about it inside Roblox, like you're this podcast guy inside Roblox. If you were known for something specific, you're running around, oh, that's that podcast guy, so and that builds relevance and awareness. Another interesting development is Temu, and what Temu does. I mean, it's one of the biggest e-commerce companies in the world. They are paying close attention to what you're looking at, how long you look at it, how long you click on it. They're creating demand by observing your behavior. So what they're noticing is that you like the yellow one better. So what I'm really interested in about Temu is, how do we use Temu as a lever to figure out what products people want to buy? Because if we launch small runs on Temu can tell us which color and which price point resonated more. And we can know that information very quickly. And so what I'm finding with retail and product development and IP and sales is that Temu is kind of the head of the spear. Because with Walmart, what you have to do is you create a product idea. You don't know if it's going to work. You go to Walmart, you convince them to give you an order. You buy, build, ship, and it sits there on the shelf. And then you find out if anybody wants it or not. Temu can do that for you right away in a very, very short period of time. And they're selling billions and billions of dollars very quickly. And that's their modus operandi. It's pretty interesting.
It makes me think about places where maybe stuff isn't getting licensed traditionally. So let's go for like the ultra high net worth community. Obviously, we talked about there's some of the biggest fashion brands in the world and some of the biggest car brands in the world are doing real estate. What about events? Like, do you think, like, you look at, again, just the high net worth people off this show, right? Like the idea of like, could I approach a Ferrari or something and say like, or Patek watches or something that my audience already desires, right? And saying like, I don't know, do you think it's illogical that a brand like that would let me license something in the events world because they want to own all those events?
Well, first of all, I think events is the future for sure. Entertainment, and so again, how do you build your show, your IP, and your content? It's definitely live events and consumer engagement. I think that is a big trend for sure. I really like what Patagonia does by saying at the mountain movies, they say, powered by Patagonia. So there'll be a great touching story developed, and you watch the story about a mountain climber and his kids and this and that, and then you see powered by Patagonia. So I love that, what they're doing there, and I think that luxury brands could do something similar. I think some of them do. There's some pretty innovative things, but where it doesn't work for sure.
Yeah, I could definitely see them sponsoring me,
Yeah.
right? It's like, hey, I'm doing all this stuff. I've got your all the ideal clients. Do you want to sponsor it?
Yeah.
But I'm thinking of like, is there a way to license it in a way where actually, like you said, I'm leveraging off the zeitgeist of what let's say the kind of people that want to buy part of my $22 million penthouse in the Cayman Islands. Like, what else do they want to buy? Oh, Patek watch, a Ferrari. I don't know. I'm just using those examples, right? It's like, can I headline with somebody like that by licensing something?
Yeah, no, that's exactly right. Now you're starting to become thinking like a licensor. So like if you put an event together and license someone else, I'll tell you this. Actually, I thought about this with AI. You want to help people adopt AI in their businesses. Why not license Hewlett Packard or license, IBM, license the brand and say, look, I'll create the AI consulting division. Just, I'll give you 10%, 12% of whatever, consulting revenue I can generate. But what a great start. Just license a corporate brand that kind of represents that, technological consulting. And yeah, I think, because it's definitely a case that people need, help adopting AI into their businesses for sure. And in terms of live events, same sort of thing. So yeah. And for your podcast, right? Like, like podcast and your events, I mean, tying them together and saying, hey, look, I'll license your brand. Let me use this for this. So you think about, well, the All In podcast, I mean, they're doing an incredible job right now with their events and stuff like that. But no, I love the events. We got to talk about that more. I don't know. I haven't got a quick answer.
No, I like it. I mean, it does make me think like right now, the experiment we're playing at the business is like our Connection Estates brand is for luxury homes, kind of call them these vacation homes, 5 million to 15 million. Right. And then we're experimenting with kind of like, how Porsche owns most of Bugatti, right? It's like, okay, that's our Porsche brand. What's our Bugatti brand? Kind of, $25 million plus, $25 million to $65 million plus homes. So right now we're calling that Windsor Collection. Okay. And, they're one-off properties, the 20,000 acre game reserve in South Africa where, we're going to do another Hawaii. We're looking at, looks like we're going to get this skiing, this super fancy cabin here on the ski resort in Utah. So like, yes, you could go the branded residence way, like those buildings, the Bugatti house or something like that. But maybe there's another direction. Maybe it's like the product line within our homes or something. It's like, maybe we license some like super high end fashion brand, and that's what the furniture and like the pillows and blankets are in our properties. Or I'm trying to think of like, because I still want to build my own brand. Like I am trying to build Windsor. I'm not trying to like pretend Windsor doesn't exist and say like, oh, this is the Chanel house or this is the Dior house, right? Like I would like to build the Windsor name to have its own recognition, but like maybe partnering with something we've licensed. I don't know. Do you have any thoughts on that?
Yeah, you're talking about aligning. So creating your own brand obviously is fantastic. It's a great. It'll make you very rich if you get it right, if you can nail it. And of course, it's all based on authenticity, and it has to be connected to something to make it real, or you have to make it real. So the experience needs to be something special. Or like as a developer, you've got a lot of things to worry about. Maybe what you need to do is identify a brand that could be a global brand, partner with them, give them your ideas on the pillows, the blankets, the experience, the Nike gym, the, tailor-made golf tee-off putting range that you have set up, all that stuff combined. A lot of brands are very concerned about it because they don't want to get connected to a developer that doesn't uphold their brand name. I mean, it's their name. I would suggest to you that as a developer, that's where you should go. You should, and look I could help you with that. We have we've developed some of our own IP. The thing is too, is a lot of big brands haven't got control over all their IP. The Rockefeller was one I just did a lot of research on. Rockefeller has their IP in Dubai, like they own all of it. Like you can't just slap up a Rockefeller building, and they've done that globally. But there's a lot of brands that haven't, so their IP is actually available. And there are big names like we talk about Windsor's one, but there's a lot of others that really represent, history and quality and so forth. But again, consumers love authenticity. So if you can lock down a real brand, and the licensing on development is big, it's big money. And then to you as a developer, it's gold. The margins are bigger.
Yeah, I'm not actually developing at this point. I'm just buying some incredible place, and then where normally you'd have to buy the whole thing, and we put together a structure where just buy as much as you need. Somebody wants a half, somebody only wants an eighth because they're like, hey, I'd be lucky to get there 6 weeks a year. I have five other homes, right? And it's just letting them, like, we call it our intelligent owner model. They just right size their portfolio, and quite frankly, we have like these people who are saying like, oh, rather than own this $30 million home, I'd rather own an eighth of this one, a quarter of that one, half of this one, and an eighth of that one, for the same dollar amount, right? Anyways, it's very thought provoking. Now I'm going to I get have trouble going to sleep tonight.
Well, because this is what Marriott and these guys are thinking about all the time, and you're just kind of a mini version, right? You just need to try to get a brand that resonates. Because if I were you on that project, because that's a global project that you can continue, and these properties are really unique and special, and I would brand it one authentic brand throughout, and then I'd focus on scaling it. For sure.
Like the most amazing thing, which I don't think I could get per se, but like, imagine if all my sheets and pillows and the plates and stuff were all Hermes. We have this like global Hermes partnership, and the interiors are, even though it's unique property to property, it's all Hermes interiors. I don't know.
But this is what we do. This is what we do right here. And what you're asking me is, ultimately you're saying, Sam, tell me the zeitgeist part of the psyche of humanity. The wealthy people that are going to be my clients are going to resonate. And I can think of an artist that's going to do some of the artwork. I'm going to think of a homewares brand that's going to do the homeware stuff, like you're talking about the dishes, and you're talking about the design. So there's different components. I would break it up, and then the collection would be, the top end brand. So there's a lot of thought there, and we do a lot of research, but it comes down to emotions and feelings and how people interact with those things. And that's what I spend all my time thinking about, how you can, but you're absolutely right. See, you're already on the pathway. You're doing exactly what I wanted the outcome of this podcast to do, which is for business owners to think, hey man, how can I leverage this predictable behavior that I both hate in politics? I hate it. I hate that party or this party, the right or the left. I don't know, but you're frustrated because you can't figure out why people, but why not monetize it? People's behavior is so predictable. So figure out how to monetize, and you win big time. And look at all the people we admire have figured it out. They figured, like Louis Vuitton, and you mentioned Hermes and others. These people figured it out a long time ago, and they live off of it. And Care Bears, same sort of thing. Lululemon. I remember Lululemon back when they were like 18 stores. And I was looking at it. I've worked for some of the biggest private equity firms in the world. And I took it back home. And you know what my private equity friends said? They said, it's just stretchy pants. And, I'm like, guys, you don't get it. No, you don't get it. Right. And why is it that private equity doesn't understand this consumer very well? Because the mindset, what I was saying earlier about the psych profile. What is the psych profile of an investment professional? Usually comes out of a bank, usually spends all their time on a spreadsheet. So the last thing in the world they want to do is think about their feelings. They don't want to think about feelings at all. And in fact, in our business and investment, as you know, and I think that's why you're so unique and why you got the path that you have, and you're more successful than your colleagues probably, because you have both. You have the ability to look at the spreadsheets, you can look at the numbers, but you can connect with people, build trust. You have feelings, and you're not afraid of them.
Well, that's such a compliment. I want to spin the table on that though. So many entrepreneurs, so many folks coming out of private equity would like the success that you've had. And statistically, you're very uncommon to have had this much success. What do you think is different about you? What have you done that maybe not everyone else has done?
It's the ownership thing. I never thought of myself as a leader, right? I honestly, leader, what? I was talking to AI about it, and I'm like, you're just glazing me, you know? They said, no, you have all these characteristics. You're a leader. The reason you're frustrated is because other people are slowing you down and they don't understand what you're doing or why. Because they're trying to protect their fiefdoms. Because employees, and this is the whole thing about Chip Wilson, Lululemon, governance, ownership versus employee mentality. And when you ask me, like, why am I successful? Because of two things. Number one, I move fast. The Frequency of Leadership is a book that I'm working on. What is the frequency of leadership? Well, I can tell you simply, it's not a low frequency. It's a high frequency. And make decisions quickly, dumb things down to two primary factors that are really going to impact the outcome. And as an owner, I'm not interested in my ego or my status. Interested in the outcome. So I will do whatever I have to do to get that outcome. Whereas an employee is focused on managing control over things, looking good, and a lot of other stuff that is kind of irrelevant. And that's why owners like Chip run into these headbanging sessions with their employees. And that's the big mistake in governance. You got to listen to the owners. And what is leadership about? You got to be brave. Meaning that, if you're not scared, it's because you have a problem. Like you should be scared of a lot of things, but you can be brave and then take ownership, which means takes responsibility. That cow blocking the road, that's the farmer's fault because he owns that cow. It's not the cow's fault. The employee thinks, oh, it's the cow. No, it's you. So, and that's the key to leadership: bravery, high frequency decision making. And that's what I think, that's the consistency across all leaders. Like they're owners. They own responsibility, accountability, and they operate at high frequency.
Yeah.
Would you agree with that?
Yeah. Except that I want to talk a little bit more like the specialness of Sam. I agree with you across leaders. But there's many different kinds of leaders. When you think about like, look at these incredible partners you've got at iVest. Look at, your insight to see things before, just like you said, like seeing the Lululemon story when it didn't just, it wasn't just apparent on an Excel spreadsheet. Like you specifically, what do you think that, I'll ask another question. What do you think that you've learned that you couldn't have learned any other way than living the life you've lived?
Well, I think that when you're an owner, you go through a lot of pain because of all that accountability and responsibility. And you learn more through pain than through success, right? And I guess the thing that I have realized about myself, it's not that I'm clairvoyant or have superpowers of any kind, but I think I recognize patterns. And I can see around corners and I can see the future because I can see the patterns, and the patterns are very predictable. And if you wanted to listen to this podcast and walk away with one thing, it's that people are very predictable. Look at the patterns and monetize and exploit those patterns. Stop complaining about the way the world works, because it actually can work in your favor if you pay attention to those patterns. So yes. So when I saw some of my partners, their backgrounds, what I saw with those people was the end user of capital, the CEOs of companies, the founders. They would want to meet those guys, just like you with your get-togethers. Like, I want to meet other successful people. And so I knew that if we sold operating experience and track record and not capital, that was the key, because I'd worked for all these people that had billions and billions of dollars, and it meant nothing because the owners of companies are rich too. But the difference is the mindset, right? The owners of companies, they're rich, but they're passionate and they would die for people and they inspire people. Guys that work in investment firms, they don't inspire, right? That's not their job. They don't get a promotion by getting emotional and getting passionate. That's how they get fired. You want the most boring people in the world that would never go outside the lines to manage your billions of dollars. So what you end up with is a disconnect between the people that manage the capital and the end users of the money, the people you're selling it to, which is the passionate owners like Chip and yourself. So that the difference with me is that I bridge that gap. And I think you're doing the exact same thing I'm doing. We have money, but the money's not the key. It's the growth strategy, and licensing is our secret sauce. I know all the manufacturers, I know all the retailers, and I know how to exploit whatever intellectual property you have in order to monetize that and use those lever points.
Yeah. I was thinking about your example, and you're right. Like, I do see a lot more passion in the founder of the investment fund.
Yeah.
I'll see that there. But then like you start getting in the food chain, and a lot of folks got hired because they had got an MBA with a dual major in finance, and they had spent this time at Goldman, and then they spent time at this firm, and they are like, she's like the queen of Excel, or he's the king of Excel, and they needed somebody to come, do a discounted cash flow and a bunch of research.
Here's a dumb story that maybe will resonate. You think about great companies, they're like beautiful women, because great companies, everybody knows who they are, they can see them, and everybody wants them. They see Lululemon, and everybody, oh, we'll invest, we'll do your accounting, we'll do whatever. So they're getting approached by everybody, just like a beautiful woman. So you're in a bar, and the private equity guy's sitting there, beautiful woman's over there. He thinks to himself, if I go say hi to her, she could reject me, or I end up falling in love and then she'll break my heart. Those are risks. I'm going to just stay here and do nothing. I'm not even going to talk to her. And that's, to me, the investment business that I was in when I first started. And I thought to myself, no, you got to go say hi. Just say hello. That's it. And so that's why I started iVest. It wasn't because I'm a great fund manager. It was because every time I would take these guys to meetings, they would destroy the vibe. They would destroy the trust and the friendship that I developed with the owner. And he'd look at me like, hey, I want to be friends with these guys, but I just can't connect with them. I thought, okay, here's the gap of opportunity for iVest. And that's what we do differently. We're operators. We have a track record. We, Space Jam with Michael Jordan, we were there. We worked with Shaquille O'Neal on his movie. I mean, all those experiences, and it resonates with founders and owners. There's lots of capital. There's too much capital. Private equity, there's $4 trillion in overhang, what do you call it, dry powder, and that money will never be spent because the industry's not big enough to absorb that. There's not enough companies to take that amount of private equity. So everybody wants to get in private equity because it's great returns. It's bigger than bonds, bigger than stocks. It's the challenge is there's only a few beautiful women, and you've got to go and say hello to them. And that's where, we're 500 million AUM, we're heading towards $1 billion. And that's our secret sauce, is that emotional connection. And it works.
I love it. I feel like that's a mic drop right now.
It's good.
Okay, everyone. Thanks for listening. Sam, thanks for doing this.
That was great. I really appreciate it. Thanks again.
Okay. Bye, everyone.